Welcome back to this channel. This is Unfiltered Forex with me, Clement. And in this video, we'll be talking about the CPI. CPI is coming out tomorrow. That's on US CPI. That is coming out tomorrow. It's on Wednesday, 15th. And we're going to go over the expectations and the estimates and what's the expected market reaction from these numbers once they come out. All right, so even before we begin talking about the expectations, as you know, the CPI is inflation in general. It's an inflation. It's a measure of inflation, consumer price index, and usually, if you want to, or if you'd like to have a hint on whether the coming CPI is going to either be above estimates or below estimates, there are some, let me call them indicators you can look at that will tell you if it's likely to be above the estimates or below the estimates, or if it's likely to just be hot or cool, hotter than usual or cooler than usual. Okay, so the first one, usually, okay, they're not very many, by the way. Yeah, they're just two, and it's the PMIs and the PPIs. Right. So as you know, the PMI, this is the Purchasing Managers Index, and I'm talking about the ISM PMIs, not just any. The ISM, Institute of Supply Managers or Institute of Supply Management Purchasing Managers Index. That's the one I'm referring to here, not the other one for S&P Global. No, this is the ISM PMIs. And then talking about the PPI, this is of course the Producer Price Index, and usually this one, it's I'll have to talk about it in detail in a few, but first let's deal with the ISM PMIs. So I'm assuming you already know what the PMIs are, Purchasing Managers Index, and the reason why the PMI of the ISM is the one I prefer to look at. It's because it's usually split into categories. Within the overall report that comes out, there's an employment index, there's an inventory index, there's now the prices index, yeah, and others. So let's just look at the actual PMI itself. Let me see if I can find that website quickly. Yeah, I think you can just type ISM and Google search that. Oh, this Brave I'm using. ISM, this is the one, Institute for Supply Management. Once you're on the website, as you can see, ISM reports on business. Yeah, this is the first thing you're going to see. Supply Management News and Reports. Yeah, this is where you want to be. So there's the ISM reports. Go over to ISM reports on business. Yeah. From the drop down menu here, you can just click this one, ISM report on business, and you'll be brought here. And this is the one, yeah, view current reports. So what you're going to find here are the latest reports, right? So you can see the manufacturing PMI and the services PMI and the hospital PMI. So the two most important ones are the manufacturing and the services ones, and depending on what specific index you're looking at, that's something else that's going to tell you if you should be more focused on the services or on the manufacturing one. Because on the services PMI, you want to focus on prices. The prices index in the services PMI is usually very accurate because, yeah, most of the inflation pressures are found on the services sector. So changes in the prices index in the services sector will really serve as a useful indicator on whether the CPI is going to come out either hot or cooler than usual. Okay, so and then the manufacturing PMI, it's usually useful when you're trying to look at just the overall health of the economy, and just overall economic health. The manufacturing sector, the manufacturing PMI is really useful for that. There's also the issue of employment. The services PMI is also quite useful when it comes to that. Reason being, most of the jobs in the economy are found in the services sector. That's why the services PMI is usually a bit more insightful on these two aspects. Yeah, okay, let's go back to the report. So, services PMI, just view report. And as you can see, this is the latest report, December 2024. If you just scroll down here, you can ignore all of these, and unless you are very much interested in the details, you you can ignore that and just come to the table where it's the summary of the changes. And as you can see, there's the services and the manufacturing. Both of them are here, right? If you look at the manufacturing PMI alone, it's only the manufacturing indices. The services is not there, but once the services PMI is released, it comes along. The table here shows also the manufacturing numbers. All right. So these are the various indices I was telling you about. You can see there's business activity and production, new orders, employment, supply deliveries, inventories, prices, backlog of orders, new exports, imports, inventory sentiment, customers, inventories. Yeah, so it's a very insightful report because it tells you all these things about the overall economy, right? And then yeah, now let's look at the prices index because that's what we came here for. The prices index, there's an index for December and November and the percentage point change. So for December, the series index was 64.4, right? And index for November was at 58.2. That was a big jump. As you can see, it's 6.2% increase. And yeah, if you actually look across the whole report, you can see that's the biggest one, right? So that's supposed to tell you something is likely to be a big problem in the prices index or even prices in the overall economy, and it's increasing faster. Trending months, 91 consecutive months. Yeah, so for this means for 91 months the prices index has been constantly increasing, right? And what else? Yeah, of course there's now the manufacturing side, 52 versus 50, and you can see the percentage point increase is 2.2%, which is not common for the manufacturing PMI to have such a high price index. But so this tells you that yeah, there is some inflationary pressure in the manufacturing side too, right? So, and then of course these pressures are likely to be carried forward onto the consumer, and that's how inflation just grows. All right, so even before I move on, it's pretty obvious at this point that the coming inflation report for December is going to be hot if the services PMI is showing such a significant increase. It's not very common for the index to be at above 60, let alone this close to 65. In fact, if you are interested, you can look at the actual chart of these indices. Let me show you. I don't know if it's here. Wait. View charts. Yeah, view charts. This will take you to the actual report, and then now you can start viewing the charts. So you can see supply deliveries, inventories, prices. Yeah, you can see 64.4% it's a significant uptick, and actually for the whole of 2024 it was almost the highest, right? This is around February, January, February, when there was this significant uptick. But anyway, this tells you that the coming inflation report for December 2024 is likely to be hotter than usual. All right. So now that I'm done with that, I don't think I'll go back to look at the. Let's just look at it. The manufacturing PMI, the prices index in the manufacturing PMI. Yep, the prices index. You can see this one is as much as was 52.5. It was still within the average, right? It wasn't a very big red flag as compared to what we've seen in the services PMI. But in the services PMI, remember that's where most of the prices are. So that's where most of the inflationary pressure is in the services sector. And that 64.4 that we just seen, that's definitely, of course, what's going to really tell you what's coming in the coming inflation reports. So that's it for that one. I don't think I'll continue that one. There's also, remember, I said something about the PPI, right? It's today. The PPI is actually coming out today. That's in a few hours. So the PPI is the producer price index, right? Right, the producer price index. This is an inflation reading on the producer's side. Producer price index. This is an inflation reading on the producer's side, and the wholesalers, the people who buy, or the businesses that buy goods in bulk or raw materials in bulk to now sell them to consumers and retailers. This is the producer price. The producer price index. They are included here. And if these guys are experiencing some inflationary price pressures, of course they will carry those pressures forward onto the consumer. So the PPI is leading the CPI, right? For that simple reason. Inflationary pressures on this side will be carried forward onto the consumer. That's why the PPI becomes important to monitor on how it's been progressing. All right, so one thing you need to understand is that on this one is not as direct as the, what do you call it, as the ISM PMIs. It's not as direct as that, because this one, it's released almost at the same time as the CPI, and it's released by the same institution, the BLS. So what you're going to find here, or rather how useful this is going to be to tell you what's coming, is if there's a significant uptick in the numbers here, right? So for example, in the previous month the increase was 40 basis points, which was like double the estimates, and you can see even the previous number was revised upwards. So there's somewhat of a trend here, and it's telling you this uptick in prices is likely to be carried forward into the consumer in the coming months. And now the coming months in question here is going to be December and January. So if we wait for this report that's coming out to see what it's going to show, then it's going to be like a confirmation on what you're going to find in the CPI itself, right? So if this one, for example, comes out above estimates, either at 50 or 60 basis points, that 0.5 or 0.6%, that's going to be bad news, not just for the economy, but even what people were expecting for the CPI. Now they'll be expecting something hotter, a bigger number, and that's what's going to spark a lot of volatility in the market, right? So now moving on, there's also what do you call this CME Fed Watch tool. Currently, next FOMC meeting is in around 2 weeks, and yeah, these are how the expectations are looking. Wait, it's not loading. Yeah, these are how the expectations are looking currently. The market is expecting the first and only rate cut of the year in July, right? So you can see the market is not expecting any rate cuts at this time, which is, yeah, quite bullish for the dollar. And if incoming data like those inflation reports we've seen are coming, the PPI and the CPI, and also like you saw the NFPs last month, if the data, incoming data continues to come in strong, then these probabilities are likely to be pushed forward as we go deeper into, or as we go further into the year. And yeah, at some point maybe the market might even price out this meeting rate cuts and probably push it forward to the next one. And yeah, you know how this goes. All right, so the main takeaway from this is that these numbers, not just the PPI but even the coming CPI, the numbers are likely to be quite hot for the market. And when they're that hot, of course, that means the dollar is likely to continue gaining strength for some time. Oh, for this video, I won't look at the charts. I'll do that in a later video. I hope you've learned something new. If you liked the video, if you liked what you've seen, you can leave a like, and if you have a question, you can ask in the comments. That's it. Have a lovely day.